Shane, thanks very much for joining Blue Notes for the third quarter trading update. Capital generation has been very much front of mind for investors. How did you see the capital generation in this latest result, and how does it stack up against peers?
Well, we think our capital performance is very good actually over the last 9 months. You know, clearly there's a heightened interest in capital for a couple of reasons. One is since the GFC, it's pretty clear that your capital levels are important as a bank globally, and two, regulators have made it more important. And so with the new surcharges and the new capital levels that are being imposed on us and our peers all around the world, investors want to know how are you going to get there and how quickly. And so there's a lot of interest in organic capital generation, and we've done a really good job particularly over the last 6 months in terms of capital.
Andrew Gates's investor update in Hong Kong a couple of weeks ago was quite well received by investors. They were pleased with the story about driving more out of the network, but liquidity is still very easy to come by in Asia. Margins are still tight. How do you see that Asian network delivering?
Yeah, I mean, returns in Asia are constrained more importantly, from my perspective anyway, from the fact that, you know, Asia is a very competitive market in the first place. So even through the cycle, even better times, returns in Asia will be marginally lower than they are here in Australia. That's just the way it is. What was important about what Andrew was saying, again, is we can and we are producing returns above our cost of capital today, and we can improve from where we are now. Remember, we create value for our shareholders in two ways. One's from return, but also from growth. And the great thing about our Asia franchise, it's going to be able to produce decent returns. He talked about 13-ish%, and really strong growth. And that's a really terrific combination when we get it right.
Once again, credit quality is a surprisingly good story. Are there any signs yet that that cycle might be turning?
No, there's nothing out there today that causes us concern. We're obviously very alert to it. You know, you don't want to get overconfident, but the trend's actually been reasonably consistent, and it's consistent in a couple of ways. One, the level of new provisions, so the new credit losses continues to decline, so we've continued to see that at a pretty steady pace, and you know, you can look at that over 3, 4, 5 years, and it's been coming down since the GFC. That's one. And two, actually the level of write-backs and recoveries, so previous losses that we'd take that we're now getting recoveries on, that's also stayed in pretty good shape. So, you know, when we look at the health of corporate balance sheets in particular, look at those kind of levels, look at the level of interest rates, look at the level of activity in the market, everything suggests that that trend can continue for some time.
Obviously this is a trading update without all of the detail that we get in a full or half year result, but the global markets result was perhaps something that didn't appear all that strong. What was behind that? Well,
we've said for a few years actually, the nature of our business, because it's regionally diverse, it's not just a business here in Australia and New Zealand, it's increasingly focused on Asia in particular, we do have normal seasonality in that business. And what I mean by that is actually customer activity, which drives our business, changes through the year. And it's generally always been softer in the second half. And so the third quarter typically is a little bit softer customer activity. And if that means a little bit harder for us to generate the same revenues and if customers are doing less. And we saw that again this year, although it's only a marginal softness. And then overlaying that, what we talked about in the release was the volatility of markets was also historically low, and that makes it a little bit harder for us to generate revenue. What was pleasing about our result is that that softness was only small, and in fact when we look at our peer group, some of the international and regional banks, you know, we fared a lot better than they did.
The Trustee business sale was finalised in the third quarter. Are there any particular intentions for the money that was realised from that sale?
Well, we said at the time of the sale we're going to reinvest the proceeds of that into the organic business, which we've been doing. All of that investment will happen within this financial year, so the amount of profit that we have, we've reinvested. It's being reinvested in a range of activities across most of our divisions, and it's to drive, you know, future better outcomes for customers and better productivity outcomes across the group.
Thanks again for joining Blue Note, Shane.
Thank you.